Hey everyone, it's Evan here from the Trade Risk, and in this video we're going to walk through a recent trade members and I took in DDC, and my goal is to give you some insight into our trading process and hopefully teach you something along the way. The topic in focus in today's video is how to obey a trailing stop. As always, if you have questions or comments about this trade, please leave them below in the YouTube channel. So, this trade was a 5-day losing trade for us, and we took this back on January the 26th and we exited on February 2nd. So let's take a look at what this trade looked like on the setup. So this is the technical picture here when we entered the trade back in January of 2016. You can see a nice thrust off of the lows in late December, and then it went into a period of sideways consolidation, holding high and tight, building out a nice base as the moving averages caught up. Really just a picture perfect setup. I love taking these kinds of trades, and you can see there with the pink arrow, that was our entry price right up there near the close of the day, and you can see it was a clear breakout, a clear expansion bar making new recent highs, so new multi-week highs, and a sign for us that this trend wants to continue in the near term. So let's take a look at some of the more specific things we were looking at. So why DDC? First, it starts with the market outlook, and the market at this point was not healthy. This was really a bear market bounce. That was sort of the environment that we were in. Maybe it turned into some big V-shaped rally, but in our mind, it was a retracement in the context of what was then a downtrend in the market. So it was time to be cautious. This was the exact note that I sent out to members when we put on this trade. DDC is a nice looking setup in an uncertain market environment. I don't mind taking single stabs at good looking individual stocks while we keep exposure low. And that last few words there, those last 5 words, those are the important note to make, while we keep exposure low. So this was actually our only position on at the time. So with a portfolio of 0 to 100% invested, if you're not factoring in margin, we were about to put on a trade that would take up 10% of our capital, or whatever the case is. It would just put our toes in the water here and give us some long exposure because we knew the market wasn't healthy, but we love the technical setup. The time frame was on the daily time frame. That's what we discussed later on. So let's take a look at what the trade structure and risk to reward parameters look like. So our entry was at 10:45. That was effectively the close of the day. Our stop was down at 10:05, so a little bit above the lows of the day because that was such a big expansion day. I was comfortable putting the stop up there. And we were targeting $11.05. So our risk was 40 cents in the trade. That was our delta. That's our R. And we're looking for about 1.5 times our risk to sort of reassess and potentially take some partial profits. So the green line up there, the green dashed line at the top of the chart, that's our target level. The red dotted line, that's our stop loss. The black line, of course, is our entry price. So let's take a look at how this progressed through the days. So you can see on day 1 here, we had just some sideways volatile action. We traded down to about 10.20 on the day or so, and ultimately bulls did drive price back up towards the highs of the day, but still nothing that looked super convincing. So you can see we really did nothing on this first day. Our stop and everything remained the same. Our outlook remained the same, and we're just going to take this to the very next day. So day 2, you can see we made a little bit of progress, but still not much, finishing up 2 pennies higher than we did the previous day. And you can see this is off to sort of a sluggish start here. It's not, it's certainly not something that's just off to the races confirming our entry bar, but there's still nothing for us to do here. We're holding above our stop. We're holding that breakout level. So it's time to just sit and wait. Day 3, this is where we finally get some movement in our direction. This was the most bullish looking bar we've had, and at this point we can finally start to raise our stop up just a little bit, and you can see we take advantage of that and move our stop up 15 cents to $10.20 as we get that movement in our direction. As we move on to day 4, you can see we see further follow through to the upside, getting all the way up to above $10.80, but closing just off the highs of the day. And once again, we take advantage of price moving in our favor, and we move our stop up, trail our stop up to $10.30. You can see it's just 15 cents under our entry price, and this is looking good. It's coming into our target level at $11.05. Now on day 5, this is where the rug gets pulled from underneath us. Just the previous day, we were excited about potentially hitting our profit target and getting to take some of this off the table, and the market went ahead and changed character on us the very next day. So you can see we exited the trade. We got filled and exited at $10.35. Our stop was at $10.30. Our trailing stop, remember, has been moving higher. And you can see it did close off of the lows of the session, but still down around $10.20, so it did violate our stop loss. We exited this position intraday after it triggered our stop loss, and we did manage to get a fill a few cents off higher than our trailing stop. So very simply, once our stop is hit, there's really not much arguing with the trade anymore. It's really time to exit. Now, notice that this was a change of character day. This is a very large sell bar coming in after not seeing something going back a few weeks, or really probably not until the end of 2015 on a sell bar that big. We broke the near-term trend, and we broke the 8-period EMA. So for some of you who have watched these other videos, our trailing stop does vary just a little bit. Sometimes it's down near the 20 period. Sometimes it's closer to the 8 period. I'm not going to get into the debate of what is best. For us, it does vary a little bit. Just depends on the behavior of the stock and what we're dealing with and the market environment, depending on how tight we keep things to current price. But for us, we wanted to keep things relatively tight. $10.30 to us meant that the existing near-term trend was intact. That broke on this day right here, and this was an exit for us. No questions asked, and it's time to move on. So the resulting exit was a 10-cent loss in the trade, and that equated to a minus 0.25 R loss, and that's based on, remember, the 40-cent risk that we initially sized and were allocating towards this trade. So we took 1/4 of our total acceptable risk that we allocated for this trade. So a small loss, and that's how we like to keep our trades, to keep our losers, is keep them maintained at 1 R or less. So the final numbers are right there. Is about a 1% loss, 0.25 R loss. Any questions, please leave a comment below. I don't want to just talk about winning trades in these videos. I want to explore the losing trades. Most of them aren't so exciting because we get stopped out the very next day, but this trade had a trailing stop that actually kicked in and was a little more interesting. So let me know if I can answer any questions. And finally, if you want to receive trade alerts in real time, if you want to participate in trades just like we covered in today's video, there's a link appearing in the top right-hand corner of your screen that you can click, or you can head to thetraderisk.com/premium. Just drop that in your browser or click the link in the top right-hand corner to get more info and sign up for our premium membership. This is where we send out all of the trades we are taking in real time, as well as the thought process behind all of our decisions. So just like we covered in today's video, instead of getting it in recap format, you're getting it as it happens, why we're doing what we're doing, and all of the management decisions along the way. So head to thetraderisk.com/premium or click that link in the top right-hand corner to see if our service would be a good fit for you. And as always, thank you for watching, and I will see you next time.